This is Nightly Business Report with Tyler Matheson and Susie Garrett. Funded in part by
TheStreet.com and Action Alerts Plus, where Jim Cramer and fellow portfolio manager Stephanie Link share their investment strategies, stock picks, and market insights. You can learn more at TheStreet.com/NBR.
Shop till you drop. Americans spent like crazy last month, thanks to falling fuel prices and rising employment. Do consumers hold the key to more economic growth?
Hot topics: crude settles below $60 a barrel for the first time since 2009, and those falling prices aren't going unnoticed by some of the biggest names in the world of investing and government.
And debt dilemma. Nearly 1 in 5 Americans say they never expect to get out of debt. How can you keep your money issues from spiraling out of control? We have all that and more tonight on Nightly Business Report for Thursday, December 11th.
Good evening, everyone, and welcome. Stocks sprinted out of the gate this morning, spurred by good news about jobs, another dip in oil prices, and better than expected retail sales for November. But then, like a horse that ran the first furlongs too fast, the market slowed, though it did cross the finish line with modest gains. After being up as much as 225 points, the Dow finished 63 points higher on the day. NASDAQ added 24 and the S&P was up 9. Oil moved lower again. Domestic crude fell another dollar, closing below $60 a barrel for the first time in 5.5 years. Foreign Brent crude fell a half a buck. It finished at $64.24 a barrel. As for that pickup in spending last month, retail sales rose 0.7%, nearly double forecasts, led by autos, clothing, and electronics. Meanwhile, jobless claims fell by another 3,000 last week. So what do all the data threads mean for the economy? Steve Leisman takes a look.
The theory was simple. With lower gas prices, Americans would buy more sweaters, that is, discretionary stuff that they could purchase with a little extra money in their pocket. Trouble was, there was no proof that that's what Americans were doing until today. The government reported that retail sales in the critical holiday shopping month of November were much better than expected, and October sales revised higher. The key stat? Gas station sales fell 0.8%, but clothing and apparel, aka sweaters, were up 1.2%. Sales at department stores and internet retailers both surged 1%, suggesting the holiday season got off to a good start for retailers.
Some of the things that are happening in the commodity prices are going to be a very significant positive. They are the tax cut that everybody's talking about, and it's going to work its way into both, retail sales. It's going to work its way into consumer confidence, and it's going to work its way. Remember, this is not just the consumer. The enterprise benefits from lower energy prices as well.
The better retail numbers have economists thinking overall growth will be somewhat better in the fourth quarter than originally estimated. Some had looked for a big decline from strong third quarter growth, but after back-to-back quarters north of 4%, it's now looking like the fourth quarter could come in between 2.5 and 3 on the strength of the consumer. Attention now turns to the most important month of all, December, when consumers and retailers play that great game of cat and mouse. One hopes prices are cut, and the other hopes stockings get stuffed at full price. For Nightly Business Report, I'm Steve Leisman.
How consumers make their spending decisions was one of the topics at the annual Deal Book Conference in New York City today, where some of the biggest names in business and finance were speaking. Other big topics: falling oil prices, the economy, the markets, and a landmark decision in an insider trading case. Mary Thompson was there.
High above the streets of New York, the falling price of oil, a popular topic at the annual Deal Book Conference.
The fact is that lower oil prices are like a tax cut to the economy.
Like Treasury Secretary Jack Lew, Goldman CEO Lloyd Blankfein says lower oil prices are good for the U.S. and better for Europe.
Europe should be ecstatic. Europe is far and away an importer of oil, so it's a very big boon to their economy.
On the flip side, Lew sees lower oil causing additional damage to a Russian economy already wounded by sanctions linked to its military actions in Ukraine.
I think that there's a kind of perfect storm right now of pressures on Russia's economy. It was weakened by sanctions, and now it's even weaker because of oil prices.
Here in the U.S., oil's recent plunge shaking the stock market, though hedge fund titan Ray Dalio believes the stock market's upward trend is intact thanks to low rates around the world. The worry, he believes, is how central banks' effectiveness in helping economies and markets will be limited down the road.
We are long equities, and we are holding those positions, and it's a relatively good time. What I worry about is if we were to take it a year or two in the future, what the effectiveness of monetary policy will be, particularly in a deflationary environment.
Another hot topic, a ruling Wednesday that could render recent and pending insider trading cases moot, including several brought by the Securities and Exchange Commission. SEC Chair Mary Jo White acknowledging it could be a landmark ruling.
There's no question it's a significant decision. And my initial sense of it is that it took the opinion and the decision an overly narrow view of the insider trading law, and that is a concern. But we're continuing to review it.
A ruling that could turn the approach to regulating insider trading inside out. For Nightly Business Report, I'm Mary Thompson in New York.
In Washington, and with hours to go before tonight's deadline to shut down the U.S. government, Republican leaders delayed the vote over the controversial spending bill. The delay indicates they were not certain they had enough votes to pass the measure. It's run into opposition from conservative Republicans and liberal Democrats alike. Congress still has until midnight to pass a continuing resolution that would keep the government open.
Do you feel a little less wealthy? Well, the Federal Reserve says that for the first time in more than 3 years, Americans' household net worth declined during the third quarter, falling 0.2%. A drop in stock prices over the summer months apparently overwhelmed steady job gains and rising home values.
Strong debut for shares of Lending Club today. It's a peer-to-peer lender which began trading. CEO Renaud Laplanche says the firm's low-cost online platform allows individuals to cut out banks and other lenders and is poised for solid growth.
What we're focused on is really building the company for the next decade. We think we have an opportunity to transform the entire banking system, make it more transparent, more cost-efficient, more consumer-friendly.
Well, after pricing at $15 a pop last night, above their expected range, shares shot up, yes, 56% today, and Lending Club isn't alone. On Deck Capital, a peer-to-peer small business lender, is gearing up for its initial public stock offering in the near future. But what is peer-to-peer lending? How does it work? And can it change the banking business as we know it? Let's find out from Cliff Goldstein, personal finance analyst for NerdWallet. That's a personal finance website for nerds. No, for consumers. Cliff, welcome. Good to have you with us.
Thank you. Thanks for having me. Appreciate it.
For people who don't know what this company, Lending Club, does, what does it do, how does it work, and how does it make money?
So simply put, it's an online financial marketplace that connects lenders with borrowers. And they make money on origination fees from each of the loans that pass through their platform.
So, Cliff, why would somebody go to the Lending Club as opposed to their local bank if they needed a loan?
Yeah, they're able to access much smaller loans than you're traditionally able to get from banks. Lending Club offers loans up to $35,000 for individuals and $100,000 for small businesses. This is a space that banks are not very active in terms of that size.
Who are the lenders?
The lenders are actually people like you and me. I'm an investor personally. There are thousands of people around the country who invest in these loans. As it's become more popular, though, a lot of institutions have begun to invest as well.
So what are the risks to the borrower and to the lender?
Well, the risks to the borrower are just that the risks to the lender are that the rates are there's a risk of default. Just like with any loan instrument or debt instrument, default rates could increase in an economic downturn. It's also a very young and immature market, so we don't know exactly what it's going to do over the long term.
Did you say that you yourself are an investor/lender in this company? And if so, are you making direct loans to individuals? And then if so, how do you decide whether that person is qualified for the loan and what the interest rate will be?
So I do make direct loans. I use an automated service that Lending Club provides that allocates my loans in $25 segments to different borrowers, and that helps me build a diversified portfolio of loans. The same way that you would invest in an ETF or a mutual fund to get a diversified investment in the equity markets.
So very quickly, you might put in $1,000 as a way to make 5% on a loan or 9% on a loan or $5,000. Right. Am I understanding that correctly?
Yes.
Okay.
And so you actually know who you're lending to, or is it kind of anonymous?
You don't know them personally, but you can see what they're using the funds for. And what's really interesting is over 80% of borrowers actually use these funds to consolidate existing loans and especially credit card debt.
And how about the other way around? The borrower, do the borrowers know who they're borrowing from? I mean, it's not like going to JP Morgan, I'm going to Cliff Goldstein. I mean, how do I know what your financial standing is?
You won't. You'll just know that the money has been invested with Lending Club and you're operating through their system.
What if they don't pay?
What if the lenders don't pay,
No,
or the borrowers
the
don't
borrowers don't pay?
Well, there are defaults. Default rates have averaged around 5% historically so far, and that gets worked into the historical returns. The lenders and investors have traditionally seen 5 to 8% returns historically.
Well, Cliff, thank you for spelling it out for this old guy here who doesn't understand it at all. Cliff Goldstein, nerdwallet.com. Thanks very much. Still ahead, a new survey shows that almost 20% of Americans doubt they'll ever get out of debt. But there are smart ways to get your finances under control. We'll tell you after this.
Dow component United Technologies out with some disappointing guidance after the market closed today. The industrial giant, which makes everything from Sikorsky helicopters to Otis elevators, now says earnings for the fourth quarter will be about $1.60 a share versus Wall Street estimates of about $1.68 a share. Investors sending shares down initially in after-hours trading.
More banks behaving badly. Wall Street regulators aren't toying around, fining 10 banks a total of nearly $44 million for violating conflict of interest rules. The Financial Industry Regulatory Authority says the banks, including JP Morgan Chase, Citigroup, Wells Fargo, tried to secure advisory roles in the initial public stock offering of Toys R Us by offering the retailer favorable analyst coverage if they were named as underwriters for the IPO. None of the banks admitted to any wrongdoing, but a Citigroup spokesman said it is pleased to have resolved the issue.
Just a few days left for individuals to renew their health insurance plans through the healthcare.gov marketplace or enroll in a new plan. The deadline is this Monday. Aetna, one of the plan providers, says it's seeing a flood of customers enrolling in healthcare plans. Aetna sells plans in 17 states.
Well, it's not only the time for individuals to sign up for a health insurance plan, but for small businesses, too, looking to secure health care for their employees. Kate Rogers has an update on the government's efforts to help small companies make some big decisions.
The Small Business Health Options Program, or SHOP Exchange, was set up to make it easier for small businesses with fewer than 50 workers to enroll in health coverage under the Affordable Care Act. The law does not require these companies to provide insurance, but it hopes to encourage them to provide coverage by making it cheap and easy. So how easy is it? We checked in with some small biz guys to find out. Harold Jackson, owner of Buffalo Supply in Lafayette, Colorado, says he needed nitty-gritty details like his workers' dependents' Social Security numbers in order to enroll them in health insurance plans on Colorado's state-run SHOP Exchange this fall. He has always offered them coverage and thinks it's key to attracting and retaining the best employees. He went to the exchange in search of lower costs, but found a lot of legwork.
It took a lot of time to gather that data and to get it entered into the system. And when I got finished and attempted to get a quote, I couldn't get it to work.
And as a small business owner, he says the time and energy required to enroll via SHOP just wasn't worth it. In the end, he found a broker to help him get coverage for his workers instead. Jeff Vallet, owner of Vallet Tax Services in Logan, West Virginia, did manage to get enrolled on the federal Shared SHOP Exchange. But his experience wasn't without challenges. Like Jackson, he wants to offer his workers coverage simply because it's the right thing to do. To his relief, he found SHOP premiums in line with what he had been paying last year. But he also found the process to take him nearly 10 hours.
There's really nothing out there that says do this and then do that. It was pretty much trial and error. If one letter or one number wasn't correct or an initial was there that shouldn't have been, it was kicked out and we were prevented from getting everything into the system.
The good news is Jeff will be able to take advantage of the small business tax credit for businesses with fewer than 25 employees and average salaries of $50,000 or less. So Jeff will get back 50% of the premiums he pays annually for his workers' health insurance. Next year, shop exchanges will expand to be open to those with 100 or fewer full-time equivalent workers. The shop enrollment goal for 2015 is 2 million people, and there's still a long way to go. A Government Accountability Office report released last month found that only 76,000 workers had enrolled on state-based shop exchanges as of summer 2014. For Nightly Business Report, I'm Kate Rogers.
An activist might be eyeing a merger between Office Depot and Staples, and that's where we begin tonight's Market Focus. Starboard Value took a stake in Staples, and it also raised its position in the company's rival, Office Depot. Some sources say that the hedge fund could be setting the two companies up to join forces. Shares of both chains rose, Office Depot surging 12%, Staples rising more than 8.5%. Lululemon reported better than expected sales and quarterly earnings thanks to a jump in online orders. The yoga wear maker gave a disappointing outlook for the holiday quarter, but investors seem to ignore that. Shares rose more than 9% to $50.96. Shares of Urban Outfitters also rose after the retailer issued positive guidance on its financials. The retailer says it expects same-store sales to rise in the current quarter. Shares popped 7.5% to $32.29. Shares of Coach rose on reports that the French luxury products maker LVMH is interested in buying the handbag maker. Reportedly, LVMH, this is the Louis Vuitton owner, is attracted to the company's turnaround efforts. Coach rose 2.5% to $34.46.
Well, eBay may be preparing to cut thousands of jobs. The Wall Street Journal says the company is thinking about the cuts ahead of the spinoff of its PayPal unit. The 3,000 potential layoffs, about 10% of eBay's workforce, would reportedly come from its core operations. The report also says a standalone eBay would be an attractive takeover target. Shares rose almost 3% today to $56.78. SeaWorld CEO is stepping down in January. The theme park operator's chairman will serve as interim chief, and its current CEO will stay on as vice chairman of the board. Investors didn't quite know what to make of the news, apparently. Shares were volatile after hours, as you see there. Before the close, they were about 3% higher at $16.09. Norwegian saw its shares slide after a report of a fire on a ship. 3 people died after a fire broke out on an Oceania cruise ship, which was in St. Lucia at the time. Guests have been disembarked from the cruise liner. Norwegian just recently acquired the parent company of Oceania. Shares dropped off toward the end of the trading day, as you see on that graphic, closing down about 2% to 43.73. And researchers suspended a clinical trial of a new Ebola vaccine, which is being developed by Merck and Link Genetics. That's because a few of the volunteers in the study complained of pains in their hands and feet. The stock was down 19 cents. It finished at $59.34.
Even though more people have health insurance, a lot of Americans are saddled with unpaid medical bills. A new government report says nearly 20% of all consumers, that's about 43 million people, owe money for past medical care. The Consumer Financial Protection Bureau also says many people are confused by notices they get from hospitals and insurance companies about the cost of treatment.
Well, the debt dilemma is becoming even more dire for some Americans. Nearly 1 in 5 say they never expect to get out of debt. Sharon Epperson joins us now with surprising statistics from a recent survey and money moves to make to prevent debt from getting out of control. Has the debt problem gotten worse or better, Sharon?
Well, it's actually gotten worse. Since creditcard.com did this survey in May 2013, they saw a double in the percentage of Americans who say they're going to be in debt forever. They're now saying that 18% of the people who responded to their survey said that they would have debt for their lifetime. And many people say that if they are able to pay off that debt, they're going to be in their 50s before they're able to do so. Some say they're going to be probably in debt until they're at
Pretty
least
serious.
61 or older.
Yeah, in debt forever. I mean, are we talking mostly, Sharon, about credit cards or other kinds of debt? And who's most impacted by this?
We're talking about credit cards, car loans, mortgages, all types of debt. You mentioned medical debt earlier. This is encompassing all of that type of consumer debt. And we're looking at people who, as you would expect, those older Americans, 65 and older, who are still in debt, say, I'm going to have this for the rest of my life. Millennials, 18 to 29-year-olds, they have much more time to pay off that debt, so they're more likely to say that they're going to be able to do that. Only 6% of them believe they're going to be in debt for their lifetime.
You know, I think we think about debt differently today than my parents' generation did, who were very debt averse and wanted to be debt-free.
I think you're right.
Is it necessarily a bad thing for... Please tell me it isn't, because I'm 60 and I got a lot of debt, Sharon.
Well, I think
is it a bad thing to have debt?
What's really interesting is that many affluent households, $75,000 or more in income, are just as kind of pessimistic about their debt situation as lower income folks, because I think people have so much debt when you think about college tuition debt, when you think about mortgages and all of that, and we're putting on that much debt. It can be a bad thing if you don't have control over it, and that's one of the things that I think this brought to light, the importance of really getting that debt under control.
All right, how do you fix the problem? I mean, what one or two pieces of advice can you give to people so they can get out of debt? And I know it's like telling somebody how to lose weight, you know, eat less, exercise more, but I mean, you know, what can you say?
It is that simple. It's know what you owe. I mean, many people just don't know how much they owe and who they owe and what the interest rate is on that. And you can't really tackle the problem until you have that information. Once you have that information, you start to pay the most expensive debt first, and you just work your way down. And now that we're in the holiday shopping season, so many people using their cards and racking up debt. Use the lowest interest debt that you can. Put that low interest credit card at the top of your wallet. You pull that one out if you have to use it. If you have to use a credit card, make sure it's a low interest card.
Sharon, thanks very much.
Always good to talk with you. And coming up, do you use navigation apps to make your daily commute a little bit easier? Well, now one such app owned by Google has become the target of very angry homeowners. We'll tell you why right after this.
Another blow to the struggling retailer Radio Shack. Sales fell 13% last quarter as it lost even more money than expected, $161 million. Now, sales have fallen now for 11 quarters in a row. The chain now plans to close about a fifth of its stores to help cut costs, even though some of its lenders have said they don't want to see that store closing happen.
Some mixed news in housing to tell you about. Foreclosures, including scheduled auctions and bank repossessions, fell 9% in November from the month prior. But new foreclosure notices, known as starts, shot up 6% from the same month a year ago, the first increase in 2 years. Realty Track says Florida had the nation's highest foreclosure rate last month, followed by New Jersey and Maryland.
In California, trying to outsmart the freeway traffic is a way of life. But now Los Angeles area residents are dealing with a new problem. Frustrated drivers using a popular traffic app to avoid those crowded freeways and invade local streets to get around the jams. Is there anything those residents can do? Jane Wells has our story.
So I got my Waze, using it to get to this interview this morning, and already it's taking me on a different route. I have to get off the freeway. I am a Wazer.
In 900 feet, turn right on Winnetka Avenue.
Waze is a GPS app owned by Google, which has become especially popular in congested cities like Los Angeles. Its users, called Wazers, crowdsource their traffic patterns, and the app reroutes you to clearer paths. Well, usually. Well, I guess I'm not the only one who had this idea from Waze. And that's a problem, not so much for drivers, but for the neighborhoods which have suddenly become popular shortcuts.
We spent billions of dollars expanding the 405 to 10 lanes. Why don't they take that?
Tam Nguyen lives near the most congested interchange in America, the 405 and 101, in LA's San Fernando Valley, a place drivers avoid at all costs in the morning.
This is terrible.
2 months ago, she noticed an uptick in traffic descending on her street. She blames GPS apps, Waze in particular.
And you can tell a lot of these people don't know where they're going. It's the first time here. They're looking around. I'm in a new neighborhood, looking at their phone to make sure they're going in the right direction.
Hi.
LAPD officer Troy Williams says he's getting more complaints and writing more tickets for people who are breaking the law. Google Maps, is that what you're using right now?
Yeah.
But there is no law against just driving down a street.
There's nothing illegal about it unless they're driving unsafely or breaking any of the laws. So all we can tell them is sorry.
You know, I realize they're obeying the law, but as homeowners, we can push back too.
But it may be a losing battle.
When the community comes together, it's going to make a difference.
For Nightly Business Report, Jane Wells, Los Angeles.
And finally tonight, a nearly 40-year-old personal computer was sold by Christie's auction house for, get this, $365,000. But it's not just any PC. It's the Ricketts Apple I, a first-generation Apple computer named after its original owner, and it's the only known surviving Apple I to have been sold directly by Steve Jobs out of his parents' garage way back in 1976. Now, the Ricketts Apple I is fully operational. It comes with a check from the original purchase. Really pretty amazing.
That's very cool. Think how much more power is in your pocket today than that one.
And just think about all the computers we tossed out.
Yeah.
It would have been worth this kind of money. That's Nightly Business Report for tonight. Thanks for joining us. I'm Susie Garrow.
And I'm Tyler Matheson. Thanks from me as well. Have a great evening, everybody. We'll see you back here tomorrow.
Nightly Business Report has been funded in part by
TheStreet.com and Action Alerts Plus, where Jim Cramer and fellow portfolio manager Stephanie Link share their investment strategies, stock picks, and market insights. You can learn more at TheStreet.com/NBR.
I'm Susie Garrow with a Nightly Business Report news brief. A bounce back in the stock market today thanks to good news about jobs, another dip in oil prices, and better than expected retail sales for November. Those retail sales rose 0.7% last month, nearly double forecasts, led by sales of autos, clothing, and electronics. On Wall Street, the Dow rose 63 points after being up as much as 225 points early in the session. The Nasdaq added 24, the S&P up 9 points. The Federal Reserve says U.S. household net worth declined during the third quarter for the first time in more than 3 years, blaming it on a drop in stock prices. And a government report says nearly 20% of all Americans owe money for past medical care. Be sure to tune into Nightly Business Report right here on your public television station.